Okay, I am very happy to be talking today with a friend of mine, Aryeh Holtz, but the topic we're going to talk about, which is taxes, sometimes people get very, very upset talking about it because they're just giving away all their money. And then they call me and they complain about their taxes. And I always tell them, wait a second, I'm not an accountant. I handle the investments. It's guys like Aryeh, they're the ones who actually have to deal with the taxes. So if you want to complain about taxes, call him. So Aryeh, I'm not going to complain to you, but I just want to introduce you on that note.
Go ahead. It's a pleasure being here, and thank you for having me.
So we'll talk in a few minutes about actually how you've developed a system to help people make the whole procedure less painful. Doesn't mean they're going to pay less tax if they owe tax, but dealing with it, which for many people living in Israel is a real hassle. I think you've discovered some sort of tech solution, which we'll talk about a little more in depth. But one of the issues that just comes up is the fact that people don't even know what they're trying to deal with. So what do you find are the biggest issues that people have in just being compliant in terms of paying their taxes?
Well, a lot of the times it comes to even understanding what information we need to gather and how various types of income that we have, such as investments and different types of investments, would influence our tax status at the end of the year. And then within that subsection of, what type of tax status, we also have the issue of being dual residents here in Israel. And it becomes that more complicated when you try to understand what works in Israel, what works in the US, who gets the first bite, what happens when I have an exemption in one of the countries and I don't have it in the other, and so on. So being knowledgeable at what taxes are to start with, not even knowing how to calculate it, just being aware of the fact that they're around there and they exist is very, very helpful in getting through those sore points down the line.
So one of the things that I usually tell clients when they're dealing with investments, which is the side that I deal with, is I say in my business there are only three ways that you can make money. There's dividends, interest, and capital gains. First off, is that correct?
Well, it's a very large world of those types of investments, but obviously then we have, the world of rental, real estate, and so on. And then we have crypto, which is a subsection of capital gains, but it's a bit different. And then we also have people who go for more complicated types of capital gains. If you look up, buying and selling options, put options and call options and stuff like that, which are for much more advanced investors. But yeah, in general, the three main ones that we encounter most are the dividends, interest, and capital gains.
Okay, so you mentioned something a moment ago. You used the term first bite. Could you explain how that applies to dividends, interest, and capital gains?
Yeah, of course. So at the end of the day, because we're dual citizens, we have to answer to two authorities. We have to answer to the US and we have to answer to Israel. And then this is, by the way, a very unique situation because the US is one of very, very few countries in the world who tax based on citizenship and not only based on residency. So if I were an Israeli and I moved to any other country in the world and I lived in that other country and I kept on my Israeli citizenship, I wouldn't have to do reporting to Israel unless it was something specific in Israel. But in the US, I could have citizenship, maybe even through my grandfather, not even a parent, and not step foot in the US a day in my life. And yet I'm going to have to report their taxes, report my tax return every year, and maybe even pay taxes. So that's just to understand the world that we're inside at this stage. And then because we're in that situation where we have to answer to authorities, they try to reach a resolution as to not paying double taxes. Now, it doesn't always work. In a lot of the situations, it does. And we're focusing right now on the situations where they manage to say, okay, you won't pay taxes twice, but who do I pay first? Do I pay the US, being the US citizen, or do I pay Israel, being a US resident, an Israeli resident and citizen? So when we focus specifically on these three types of income, capital gains, interest, and dividends, they have very, very specific rules as to who gets the first bite. And this does not apply to every single type of income. So employment, for example, is going to be taxed differently and first bite will apply differently. But if I focus, for example, for specifically on interest and dividends, we're going to look what the company that distributed these dividends or the payer of these interests, where are they situated? So if they're situated in the US, if, for example, I invested in shares of Apple and Apple are traded in the US market and Apple distributed dividends and I got dividends from them, then according to the treaty, the US gets the first bite. So I'm going to pay taxes in the US first, and then I'll come to Israel and I'll say, I already paid in the US. Was it enough to cover all my taxes in Israel? Depends. In a lot of cases, not. If yes, we'll get a credit for the amount that was already paid in the US, and I'll only have to pay the remainder here in Israel. I won't have to pay the entire amount. So if we put it into an example for a second, so let's say I got $1,000 of dividends, and let's say my effective tax rate in the US was around 15%, I'd pay $150 in the US, come to Israel. In Israel, it's usually 25% of the capital gain tax. I owe $250. I already paid $150 in the US, and therefore I need to pay Israel only $100. All right? And the same would apply for interest. When it comes to capital gains, it works differently. Capital gains, according to the treaty, Israel gets the first bite no matter what the source of the capital gains was. So when I sold those shares of Apple that I held onto, and I profited $10,000 from the sale of those Apple shares, I need to first report and pay in Israel, and then come to the US and report in the US, and I can credit whatever was already paid in Israel.
Got it. So just to summarize and to clarify for a lot of people, because in conversations I have with people, they often say, well, I think I'm going to pay my taxes in America because whatever, or I think I'll just pay in Israel. And I say, it's not what you think. There's actually regulations about how this is done. And the way, Aryeh, you've described it is that of the three ways that normal people make normal money in brokerage accounts, which is dividends, interest, and capital gains, if it's dividends and interest, the tax authorities are going to look at the source of that money. So if it's an American company or an American brokerage, American mutual fund or index fund from which you got dividends, or if you buy a bond in America or a CD, a bank deposit in America, and you got interest. So you would file your US tax return, and you would say, I earned this amount in dividends and interest, and you would pay the tax there first. If it turns out that Israel would charge you more because the Israeli tax bracket is normally 25%, then you might also have to pay some money to Israel. But with capital gains, you explained it's different, that the capital gain, no matter where it happens on a security, and again, we're talking about things like stocks and bonds and index funds and mutual funds, there, if you're living in Israel, you would pay Israel first at 25%. And then America, if you owed more there, so then you would pay the difference there. Comment briefly just about the difference between long-term and short-term capital gains in America, because most people, I think, generally aren't dealing with short-term, but that's a time when the US might actually, in fact, charge you more.
Right. So in the US, the rationale behind the differentiation between long-term and short-term in the US is because when we want to give a benefit for long-term gains, we want you to actually be a passive investor, meaning you're giving money into the company so that company could use that money and actually use it. Unlike, for example, brokers who could be dealing on a daily basis, and then they put in $1,000, took it out the next day. That doesn't really help the company to grow. So in order to incentivize that, the US have differentiated between someone who made an investment for up to 12 months versus someone who made an investment of 12 months and more. So if I made an investment of up to 12 months, as far as the US is concerned, they're looking at you as being an active trader. For example, it's not per se the definition, but just so we get a brief understanding of it. And therefore, your marginal tax rates are going to be the ones that apply, meaning it's going to be similar to making your salary. And in the US, the tax brackets for salary income is up to 37%. I'm not including other types of taxes. And therefore, if you had a short-term capital gain, meaning you invested and sold a month later, or 3 months later, but less than 12 months, and your tax bracket on employment or other sources of income is at the top highest bracket, you're going to have to pay 37% for that capital gain. If you made an investment of over 12 months and then you sold it and you had a long-term capital gain, there the tax brackets, they drop drastically and they go down to approximately 20%. Unlike in Israel, the US have marginal tax rates also for capital gains. Now, it's much more straightforward. It's not many tax breaks like we have with marginal tax returns with employment income. So you have 3 tax brackets, 0, 15, and 20. And the calculation itself is much more complicated, though, because it takes into account all your sources of income, not just from that specific sale or that capital gain, but in general, your long-term capital gain is up to 20%, not including other taxes that would potentially apply. And in that case, it's lower than the 25% we're usually used to in Israel. Now, in Israel, the 25% is across the board. They don't have differentiation between short and long term, which means if I had a long-term capital gain, and as we said before, Israel gets first bite, I'm going to pay 25% in Israel and most likely not going to pay anything in the US. If, on the other hand, they had a short-term capital gain, I'll still pay 25% in Israel. However, in the US, potentially, I'm going to have to be on a higher tax bracket, up to 37%. In a worst-case scenario, I might have to even pay up to 12% additional taxes in the US.
Okay, so this is a good segue now to talk about simple tax, because what you just described and saying, well, you'll pay some to America and some to Israel, most of the clients that I deal with who are people who live in Israel who have US brokerage accounts or IRA accounts, they're dealing with two accountants that are not necessarily even in the same firm, and they're trying to get them to talk to each other, or even if they are in the same firm, they're trying to get them to talk to each other, and they don't know, well, where do I file first in which report, and how do I bring it all together? How can people simplify that?
All right. So this is a great question because there is no black and white answer, right? I'm going to put in one more layer to make it even more complicated. And I'm going to say, in order to be credited in the other country, meaning in order for me to say I paid Israel and therefore I could use that as a credit in the US or vice versa, I have to first actually pay the taxes. Right? So in a lot of situations, for example, let's talk about dividend and interest, where we said the US have the first bite, right? If I didn't reach an actual tax payment, for whatever reason, I had child tax credits, I had standard deductions, I had losses that I offset from previous years or whatnot, that left me in a situation where I was filing the US first, I was liable for taxes, but didn't actually pay them because of those credits, I can't take any credit to Israel.
You cannot
Okay?
take credit.
I cannot take any credit to Israel unless I actually open my wallet and took money out of it, right? So that makes it even more complicated because in a lot of situations, people say, well, I got dividends from Apple, for example, so I'm going to go and file my US taxes first, but I'm going to say, well, you're not going to be paying taxes in the US because of your credits or deductions, and therefore you have no benefit whatsoever of filing in the US first. Okay, so adding in that layer, I'm going to give the broader picture the way we see it. Now, I am going to say this applies, from my experience, to over 85% of the population, but not to 100% of the population. If you're a much, much more complicated situation, such as a very active investor, if you have various portfolios and so on, it could be different. But if you take your average folk here in Israel, I work in Israel, I live in Israel, I got a broker account in the US, in the vast majority of cases, you're going to have to file your Israeli tax return first, regardless of what types of income you had in the US, because we're going to need those taxes paid in Israel for your salary, where Israel gets first bite, for capital gains, where Israel gets first bite, for other types of income, such as pension and so on, that Israel gets first bite. And then we can move to the US. The thing is, if you believe you're going to actually pay taxes in the US, for example, if you had significant amounts of dividends from a US company, right? In that case, what we recommend is go to your Israeli accountant, prepare a draft of your Israeli tax return, but don't file it just yet. Get a copy of the calculation of the actual tax you're going to be owing and come with that to us to prepare a US tax return. We'll take whatever credit goes from Israel against those sources of income who have an Israeli first bite. We're going to use them and them alone. We're not going to use any Israeli taxes as a credit against anything the US has a first bite. We'll finalize your US tax return and let you know if you have any tax due, and if so, which of that tax was specifically allocated to those sources of income that the US gets first bite for. And with that, you should go back to your Israeli accountant and finalize your Israeli tax return. All right. So in general, almost in all the situations, start with your Israeli accountant first. Almost always. It's got to be something really out of the ordinary in order for you to not start with the Israeli first.
So again, just to clarify, normal people, again, always like to think my clients are normal people, right? They're people who live in Israel. Mostly they've retired here. Sometimes they're still working. They have all their income. Their life is here, but they have US investment accounts. So you're saying the first stop is to give their December statement and 1099 to their Israeli accountant, and make sure he understands, by the way, I'm just going to bring this up as an aside. The 1099 is not the total final form. You have to look at the 1099 and the December statement together, because sometimes one of the things that we find a lot of times on 1099s is, depending on the type of assets the client may have had, it might not give the whole story about how much you paid for something and how much you sold it for. So if an accountant doesn't really understand that, he also needs to read the December statement. And unfortunately, there are a lot of Israeli accountants who aren't as familiar with 1099s and US account statements. They're not really fully understanding all the details, which is fine. It's not what they're trained on. Sometimes they'll make a mistake, and we get calls from clients. They say, Doug, my Israeli accountant said I made $500,000, but I don't remember making $500,000. And I had to explain it. Just, he's got to look at the December statement also. That being said, this is my aside. You're saying that the people should bring all that information to their Israeli accountant, have him fill out kind of a draft of the return, and then go to the American accountant and work on it from there with the information already that you have from the Israeli side. So that's the order. Start with the Israeli tax.
Correct.
Okay. So how are you simplifying this? So far, with all due respect, sounded complicated.
Sounds complicated. It does indeed. So what we did is we tried to make the entire process easier to understand, more straightforward, and with giving you a sense of what you're doing throughout the process. We started out this conversation saying, understand what world you're in, because that's going to make your life easier, without even understanding how the calculations work, right? Know what kind of tax world you're in. We got into the discussion of who gets first bite and long-term and short-term capital gains and so on, and there's so much more we could elaborate about. So when we collect information from our clients on the website, it's not just sending a blank email with here are documents, goodbye, but we walk you stage by stage based on the structure of the tax forms, explaining what we're collecting at every stage and why we're collecting it, what the purpose is. So that, first of all, I find to be very helpful in putting a frame around this. I'm going to call it a stressful process. People get nervous about their taxes. What's going to be the end result of it? Will I be owing taxes? If I'm entitled to a refund, will I get the max refund, and so on? So first of all, getting into a friendly environment that's explaining why we're taking the information, not just taking it from you, I think is very, very, helpful and calming. Next thing, we try to make the process itself simple as possible in two senses. The first one is efficiency, right? I have over 25,000 questions I could ask you about your tax return. But I'm not going to ask you all of them. I'm going to ask you a few dozens of them at max, because I'm going to find what eliminates irrelevant questions. So basically, every step in our website is designed to eliminate all the irrelevant questions based on any live answer you gave us. So if you told me, for example, you're single and don't have any children, I'm not going to ask you about your dependents. And if you told me you're married to a non-US person, I'm not going to ask about that person's income and so on. So that's the one thing, the efficiency in the process itself. The second thing is reading documents on your behalf. Okay, so instead of you coming and bringing your 1099 to us and starting to try to manually exert information from the 1099s, we'll have you put the 1099 into the website, we'll read it for you, we'll analyze it for you, we'll present the information at the end of the process just so you could, give us that, yeah, you read it correctly, or if anything was miscorrect, you could go in specifically for each field, go and change whatever was incorrectly inserted. And that makes sure that you're not missing the relevant points within the tax documents, and that you're not getting confused with irrelevant information. Take a typical 1099, right? A very, very straightforward one. If you had dividends, interest, and a little bit of capital gains, not too much, that's going to typically be between 20 and 30 pages long, right? And you don't need most of that information. We have some summary pages that are relevant. We have some specific information we're looking for. If I send you to go run through those 30 documents, that's exhausting. On the other hand, if you just put it into an email and send it to a traditional accountant, there's a very high chance that they're going to miss something out of it. So what we're trying to harness the technology for is to do that on our behalf and not miss the important points.
So just to be clear, the client is very involved in the process of dealing. First off, just to be clear, it's not dealing with you in particular, it's dealing with the website. In other words, this is a
Right.
little more of a do-it-yourself kind of procedure for people maybe who don't have the most complex tax situation, and they feel comfortable putting all the information together without a person, holding their hand through it.
Correct. Nonetheless, 100% of the tax returns are reviewed and checked by a person and signed off on. So it's not like a do-it-yourself in the sense of you can make a million mistakes throughout the way and then you're going to be filing it on your own to the IRS without anyone checking it. There's actually a person who checks each and every one of the tax returns on the website. And doing so, we know to check for things that don't make sense, that don't add up based on what we saw in previous years' tax returns, that don't look accurate based on tax documents that we've collected throughout the way. Because, for example, if you uploaded a 1099, yeah, it's going to take out that information, it's going to analyze that information, but I still have a copy of your 1099. So when a person on my staff goes through the tax return and checks, make sure that it's all in place, he's going to look, he has that 1099 to go and check if anything looks out of order. Now, we also get back on WhatsApp to clients to say, listen, here's something that didn't make sense. Go check with your investment portfolio manager to understand why you have a minus for proceeds, for example, right? And stuff like that. So we
So there's a
do
person
ensure.
behind it. In other words, it's not like you're going and, I don't know, buying TurboTax or something and just you're totally on your own.
Absolutely. And one of the things that I would like to take this stage to clarify in that regard, because we're going through each and every one of the tax returns, it takes time, right? So for you to do a process on the website is going to take you between 30 to 60 minutes, depending on how complicated your tax situation is, and if it's the first year or if you've been doing it for several years by and you're already familiar with the platform, plus a platform saves information from previous years, so you don't have to do it all from scratch every single year, only the updated information. The thing is that once you finish, it could take us up to a few weeks to go through it, make sure we're not missing anything, get back to you if we are, and clarify whatever needs to be clarified. And I'm going to throw into that, we're doing a lot of miluim. I mean, a lot. I'm currently in
Yeah.
miluim,
Yeah.
which means things take even more time than usual. Unfortunately, I've just passed my 300-day mark last week of
Wow.
miluim. So things are moving a teeny bitty slower. We're going to have to ask our clients to be a bit more patient with us getting back to them. But the only reason it's taking us more time is because we're actually going through each and every single document you send us, every piece of information that was uploaded, and making sure it was actually put in the right way.
I see. And then once you guys go through it, then you actually sign off on the return as the CPA, as the preparer.
Indeed. Indeed.
Got it.
I'm personally signed off on each and every one of the tax returns that we file.
Got it. Got it. So I guess the other lesson to clients is just file early. Don't wait until, the last minute. And then I find this with all accountants. People wait and wait and wait and wait, and then they call their accountant in a tizzy. How come you didn't do my return? He says, well, because we have 6,000 other returns now. If you just would have done it 3 months ago, we actually had a lot of time. We were sitting around twiddling our thumbs. So I guess a good takeaway here for people is, even if the system's more automated as your system is, there are people at the other side of it who are involved, and you have to allow time for that.
Indeed. I will say, just because we talked about timelines, specifically because of October 7th, the US have provided very, very extensive extensions for people living in Israel, or for those that their accountant lives in Israel. And so for the tax years of 2023 and of 2024, the deadline for filing is September 30th, 2025. People who filed for an extension for 2022 also have the same extension. So it's possible that you didn't file a 2022 tax return, but you're not late yet. And that means that we have, give or take, a bit more than 3.5 months to finish all of those. Don't wait for a week before, not even a month before. It's very, very pushing it. Go for it. Move as fast as possible. And I'm going to put a little small note over here. specifically for the COVID grants that were relevant for 2020 and 2021. For the most part, we know that 2020 is long gone and 2021 is over just about next week. On June 16th is the last filing date. There is an option to still file for 2020 and 2021 and get those COVID grants because of these extensions. And it is possible to get them up until September 30th, if you file up until September 30th of 2025. The only thing is, you need to be aware of the fact that you're probably going to have to fight the IRS for it. It's not going to be as simple as just going ahead and filing. They're going to probably reject your tax return, but then you could call them up and explain to them why you are still eligible. So just so people know that that's still an option.
All right. That's, I think, a great place to end. There's 1,000 other questions we could ask, but I think it would be useful at this stage probably for people to go to your website and learn a little more. Aryeh, in the last few seconds, just tell me, how can people learn more about you, the work you're doing, and how they can get started?
So we have a website. I'm assuming we could post it together with this link for people to reach it. It's simpletext.co.il. I think I even have it here behind me.
Nice.
Apparently. And you could log in. It's got everything you need to know about us, and you could reach out to us on WhatsApp through the website. There's a WhatsApp button over there. You could click on it and reach out for ask any questions you need. We're available 5 days a week, and we're more than happy to assist.
Okay, so that's Aryeh Holtz at simpletax.co.il. Aryeh, thanks so much for taking the time, and thank you very much for all your service.
Thank you for having us. It was a pleasure.